Welcome to Cold Brew Finance's U.S. End-of-Week Deep Dive, covering market moves in indexes, sectors, stocks, and global markets. The week ending Friday, June 5th, 2026. Join us as we unpack the latest market trends and data insights. Kicking things off, I'm Max Profit. In a mixed performance for major indexes this week, the S&P 500 index closed at 7,383.73, down 196.32 points. However, it reached a new all-time high earlier this week. Meanwhile, the Dow 30 index ended at a record high of 50,866.78, showcasing strong positive trends and some upward volatility. Market breadth shows varied movement across major indexes. The S&P 500 had more advances than declines in the monthly trend. Notably, the Nasdaq composite saw more decliners than advancers this week, indicating potential pressure in tech stocks. Additionally, the Russell 2000 was marked by more decliners over advancers short term. Examining total and daily returns, the S&P 500 posted a 2.5% weekly decline. Meanwhile, the Nasdaq composite experienced a larger drop of 4.6%. Despite these declines, year-to-date returns remain positive, with the Russell 2000 outperforming slightly at 14.17% return. Focusing on annual returns over the last decade, the Nasdaq composite stood out with a robust ARRR of 17.92%, significantly higher than its peers. Meanwhile, the S&P 500 and the Dow 30 index delivered 13.39% and 11.06% respectively over the same period. Overall, strong upward trends continue to dominate longer-term investment strategies.
Checking out best and worst performing equities, I'm Penny Stock. Solidion technology skyrocketed this week, closing at 35.72, a massive increase of 31.7. It recorded a new one-year higher close, reflecting a very strong positive trend. STAK Inquirer's ordinary shares also impressed, closing at 4.93, a jump of 3.97. This marks a new all-time higher close, with the last record at 4.24 just yesterday. Looking at total and daily returns, Solidion Technology delivered astonishing one-week and monthly total returns of 668.17%, highlighting its bullish momentum. Meanwhile, STAK Inquirer's ordinary shares offered a one-week total return of around 413.54%, indicating strong market sentiment. As for SDO, despite a positive weekly return, it recorded a new all-time lower close due to a negative annual performance. In terms of annual performance, Solidion Technology shines with a one-year total return of over 917.66%. SDO, in contrast, faced a challenging year with a negative return, despite significant weekly gains. Laser Photonics sees a modest one-year return, but has shown consistent weekly improvements. Among the big caps, Humana and Hewlett Packard Enterprise lead the way. Humana closed at 350.8, hitting a new one-year high, while Hewlett Packard Enterprise made an impressive all-time high at 49.20. Both indicate strong upward trends. In terms of total and daily returns, Humana demonstrated a solid 14.62% one-week return, reflecting its leading status among big caps. Hewlett Packard Enterprise continues its upward trajectory with a 14.31% weekly gain, strongly supported by its all-time higher close. Assessing longer-term performance, Hewlett Packard Enterprise shines with a remarkable 10-year total return, recording substantial growth over the period. Cooper Companies, despite short-term gains, records a mixed longer-term trend, emphasizing its volatility. On the downside, Zhongchao plunged to a new all-time low, closing at 0.3, a drop of 0.14. marking 5 straight weeks of losses. Similarly, Hitek Global suffered, closing at 0.28, continuing its downward spiral with an 80.7% decrease. Focusing on total and daily returns, Zhongchao and Hitek Global show dramatic declines, with negative one-week returns reflecting enduring downward trends. Nuwellis also faces ongoing challenges with substantial losses, evidencing a very negative trajectory over the week. In struggling stocks, Zhongchao hit an all-time low at 3 cents, dropping 84.4% weekly. It closed down for 5 weeks straight amidst some downturn volatility. Hitek Global plunged 80.7% to 28 cents, marking an 11th consecutive weekly decline, and a new all-time low close as well. Coinbase Global hit a rough patch, tumbling 19.3% to end at 152.40. It faces a very strong negative trend with notable downward volatility. Meanwhile, Enphase Energy fell 17.9% to 56.7, showing a very positive trend despite a downward breakout after a short flat spell. Looking at losses in big caps, Coinbase Global fell 19.3% with a very strong negative trend. Similarly, Enphase Energy dropped 17.9%, albeit recording a new annual high just recently. The general trend sees a mix of negative momentum across this segment. Coinbase Global struggles with a nearly 19.3% loss, despite a positive 3-year return. Similarly, Enphase Energy shows resilience with an impressive 10-year return of over 2,689.55%, despite a current 17.9% drop.
And now onto U.S. sector performance. The healthcare sector showed a strong performance with an ending price of $1,779.87, rising 2.3%, reflecting its strong positive trend and very strong upward volatility. This week, the healthcare sector saw more declines than advances, despite a positive trend. Advances were 236, while declines were 700 over the week, yet it managed a weekly gain, hinting at strong sector resilience. Evaluating the returns, the healthcare sector yielded a 2.3% increase over the week. This sector boasts a daily average return of 0.47%. The year-to-date return, however, shows a slight decline, indicating recent recovery despite earlier setbacks. For longer-term returns, the healthcare sector delivered impressive gains, with a 10-year annual return of 7.88%. Meanwhile, energy led the sectors with a 41.19% return over the past year, indicating high growth potential.
In the healthcare sector, Humana surged with a closing price of $350.8, up 44.66, marking a new one-year high and showing a very strong upward trend. Conversely, Medtronic reached a new one-year low despite closing at 81.67, rising 7.86. Cooper Companies ended at 67.34 with a mixed negative trend. Molina Healthcare finished at 190.86, up 17.26, boasting a strong positive trend. Solventum closed at 81.1, up 6.6, also maintaining a strong positive trend with high volatility. Looking at returns, Humana showed a robust 14.6% weekly increase, with a year-to-date return of over 36%. Medtronic saw a 10.6% gain for the week, although its yearly return remains negative. Cooper Companies posted a 10% weekly rise, but year-to-date returns are down 17.8%. Molina Healthcare expanded by 9.9% this week and maintains a positive trend year-to-date. Solventum gained 8%, continuing its strong positive trajectory. Examining long-term returns, Humana has seen a notable 54.1% return over the last year, while its 10-year ARR stands at 6.5%. Medtronic shows declines across all periods, with a slight 10-year dip. Cooper Companies presents a mix, strengthening over the last decade by about 5%. Molina Healthcare excelled, with a 278% return over 10 years. Meanwhile, Solventum exhibits a healthy 7.5% return over a year.
As we look at the weakest sectors, the consumer cyclical sector closed at 1,878.84, dropping 124.11 points, marking a 6.1% decline. Meanwhile, the technology sector recorded a new all-time higher close. However, it fell 380.23 points to 6,641.53, with a strong positive trend. Analyzing market breadth, the consumer cyclical sector had 140 advances versus 301 declines over the week. Likewise, the technology sector saw 127 advances against 522 declines despite a strong positive trend. Communication services were down for the fourth consecutive week. In terms of returns, the consumer cyclical sector fell 6.1% this week, equating to a negative total one-week return. The technology sector recorded a 5.4% drop this week, but its year-to-date remains positive with an upward trend. Exploring longer-term returns, technology has an impressive 10-year total return of over 813%, with an annual rate of return of approximately 24.7%. The consumer cyclical sector showed a 10-year total return near 199%, reflecting a stable long-term growth despite recent declines.
In the U.S. consumer cyclical sector, Ford Motor recorded a new one-year high despite closing down at 14.90, seeing a significant drop of 2.54. In contrast, Lululemon Athletica hit a new one-year low, closing at 114.23, diving 16.95, with a strong negative trend. Despite the weekly declines, year-to-date returns showed resilience from Ford Motor, up by 13.57%, and from Best Buy, which slightly increased at 6.89%. Conversely, Lululemon Athletica faced a formidable year-to-date loss of 45.03%, highlighting its strong negative momentum. Looking at a broader timeline, Tesla boasts a remarkable 10-year total return of 2,578.08%, clocking in at an impressive ARR of 38.9%. Meanwhile, Lululemon Athletica posted a 10-year total return of 69.88%, with continuing downward pressure on shorter timelines.
Thanks for watching. I'm Max Profit, along with my AI co-host, Penny STAK. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.